Hello, chart watchers and Decision Point faithful. Welcome to this Monday, April 13th, 2020 Decision Point show with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, we welcome you to the show and we do hope that you will come back and join our regulars. You will find our show on Mondays, 7 p.m. Eastern and 4 p.m. Pacific time, as we are pre-recording our shows right now. When we go live, we will give you the new schedule. All right, so let's get started. How you doing up the hill there, Dad?
Pretty good.
I'm looking forward to having some actual sun coming soon.
Yeah, I think it's going to be a while. Yeah.
Yeah, it'll be nice to get some warmth out there since our patios are about the furthest we can travel these days. So
All right.
exactly. All right, well, a lot going on in the market. We've both been writing a lot, and so we've got a lot to cover. We're going to look at, Carl wrote a special edition Decision Point alert on Saturday, and we will be talking about technology sector for that. I'm going to be talking about the SPY rising wedge that now is official. And short-term indicators, we're still seeing some really interesting movement on these indicators. And as I've been talking about for a couple weeks now, they've really been nailing it. They're really giving us the kind of information that we need. And let's face it, right now, we really need as much information as we can get. Solid information, that is. And then we're going to finish off. I know you had a couple of charts and information you wanted to share, Dad, so I will turn it over to you at that point as well. But let's go ahead and get started with our Decision Point scoreboards. If you notice, last week we actually had some short-term trend model buy signals come in. We don't really track these that closely except for on these scoreboards because they change regularly. They are based on 5-day EMA and 20-day EMA crossovers. So the 5-day EMA is extraordinarily fast, so you do see a lot of wiggle on it. So we don't generally talk about them. I don't generally write about those short-term trend model signals, but just for your information and interest, we did get 4 of them last week. As far as the Decision Point sector scoreboard goes, we only have one green buy, and that is in technology, and that is holding on. It looks like it might have narrowly avoided a sell signal. Those are golden cross. This is a golden cross, and of course all of these sell signals would be considered death crosses, those 50, 200-day EMA crossovers. The 20, 50-day EMA crossovers, so far none of the sectors have their 20-day EMAs above their 50-day EMAs. So we're looking at no silver crosses, as we call them at this point. All right, well, let's go ahead and look at a couple of charts. I'm going to start off, like I said, by looking at our rising wedge that has now started to appear and is now official. We've been paying attention to the possibility of this wedge developing, and I actually need to change that annotation because it is now a rising wedge. We had another top to connect the top part of this wedge, and so now we can start thinking about it. These are bearish patterns, so we should start looking for a decline out of this wedge. However, we're going to talk a little bit more about it as well, and it was in your special edition, Dad, and that was the fact that we've had a 20% plus rise off of this bottom, the bear market low, and so typically 20% plus means you're back in a bull market. Well, I'm not totally sold on that in general, but I think it does need to shade our look at the charts and give us a little bit of a bias. So we can't be utterly bearish right now, and we've had a 20% plus move to the upside so far. I'm still of the opinion we're going to come down and test these bear market lows. I'm just not sure exactly when. We'll be paying attention to our indicators to let us know that. I think good news is that volatility is starting to subside somewhat. We're looking at, excuse me, the VIX is now at a low since we hit that bear market. at a reading of 41.17 on the new methodology. And remember, we do flip the VIX. It is inverted, so the overbought is at the top and oversold is at the bottom. We haven't quite hit that upper Bollinger Band, but as long as we're continuing to rise steadily, that band is likely going to be moving further and further away and preventing that upside crossover. So
Yeah,
I do notice, yeah, go ahead.
yeah. Some years ago, I started uh, using not only the inverted scale but also the log scale for the VIX, because on the normal VIX you don't really see the movement in the lower end of the scale. It's, you know, you see the big spikes that go up when it's very active, like our lows, fixed lows here in March.
Mm-hmm.
But anyway, so that just explain why I do a log scale when hardly anybody else does.
Right. And it's funny because on our price charts, we very, very rarely are going to use a log scale. I know both of us are of the opinion that, you know, rising trend lines, patterns, chart patterns on a log scale are
Irrelevant.
irrelevant. So I guess that's a way of putting it. So we generally avoid the log scale on our price charts, just FYI. All right, so this gives us a bearish bias right here, just looking in the short term at that. But what are our indicators showing? Right now on our short-term climactic indicators, I pointed this out during my interview with Ike Iosif of Market Views. I sent everybody a link to that on our free email list as well as our subscribers so that you can get yeah, so you can see what I had to say, but I'm going to kind of reprise it for you just a little bit. And that is, we're watching very closely at these lows and these tops and seeing what happens to the indicators and what they're telling us before the breaks. And I think that that's one of the things that's been really, really helpful is looking at these divergences, negative and positive. They've been very helpful. And I noted, this is today, of course, we have these negative bars right now, but I noted on Saturday that we had already started to see a little bit of, you know, backing off of some of these positive indicators. We were starting to see some decline, and having that happen right at the top there, yeah, gave me pause, and that's why I pointed it out to everybody. Plus, having a VIX hitting what I mean, I call them low readings, but they're truly not. They're still very high. But seeing
Oh,
that up there,
just call it the way it shows on the chart. It's the easiest way.
yes.
I struggle with that for a while, but yeah, and this chart, the high numbers are lows on the chart.
Right, exactly. I mean, typically we're looking at a VIX. I mean, during our bull market phase, you know, we really didn't get above 20, but a few times. So this is really an area we're not used to traveling around and studying.
This was a
Total
very
volume going back.
climactic day today. We've got a down spike on the uh, breadth, net breadth, but the um, SPX volume, total volume, is not that high.
Yeah,
But
I was noticing that too. I talked about, I think on Thursday, or on Wednesday, the thought of holiday trading. And I don't think that it's quite as relevant right now with most people at home. So getting that low volume, that's a great point. On a decline like this, you know, there wasn't as much support going into that decline based on those total volume numbers coming down. The one that's been very interesting to me as well is our Swenlin Trading Oscillators. Again, they have been very good at setting up and telling us when we were hitting lows. You can see that positive divergence going on with the rising bottoms and the bottoms that were declining. But we're also seeing those negative divergences pay off. Right here, you can see those declines coming on rising tops. So right now, my concern is while we don't have a negative divergence at this point, we do have a higher top. The big problem with this chart right now, I would say, are overbought readings. I've put the typical range between minus 400 and 400, typical range of the Swenlin Trading Oscillators. And we are getting really close to the top of those. So that should, you know, it's something to think about.
Yeah, right now, the most recent top on the STOB and STOV is higher than the previous top. That only confirms price, and it basically is meaningless to us.
Right.
It's confirming. That's
Yeah.
it.
We're really always, that's the key. Really want to look for those divergences. They're actually telling you something. Seeing a confirmation, seeing this rise is where, I mean, confirmations are interesting, but not quite as useful. All right, so those were the charts I wanted to show as far as the market went in general. I'm gonna pass it to you to talk a little bit about your special edition and some of the information about reverse divergences that you actually reminded me of before the show. And I thought, you know, I haven't really been covering those like I should.
Right. Well, I our last show, I was talking about the decline of the OBV, and I said it was diverging negatively from price. But and actually in my weekly wrap, I called it a negative divergence. It was totally wrong. I woke up early Saturday, thought that was wrong. So I screwed up, and sorry about that. But one of the things I learned to do recently is to draw vertical lines. I use red for tops and then green for bottoms, and then I watch. Then you watch how the indicators perform relative to that bottom. Here we have OBV was still moving downward, and that's a reverse divergence. It's going against price. Now, when you have volume still heading downward, should be pulling price. Well, price isn't, and that's a bullish condition when you have price moving against the OBV. Unfortunately, it's moving into a rising wedge, and that's going to be bearish. Now, in a bull market, it's still more likely to break downward than it is to break upward. So I think this is going to resolve downward. It doesn't mean we're going to go down and touch anything. It just means that we should expect it to break down out of here before it makes any kind of move higher.
Certainly. I could see too, if we get low enough, we might be able to set up more of a rising trend channel than a wedge. That would be nice. That would get us down and break down out of that wedge, but we maybe could start seeing that. We'll see.
And also the bullish percent index, I've started to carry that on charts where I have the silver cross index. The reason being is the bullish percent acts in a much more short-term manner. The silver cross tells us where things are, but it's so washed out. It's show a bounce over here, but it's minuscule when you look at it in the context of the entire range. And here's a golden cross index, and it's pretty low. When you get moderately, say a mid-range bottom against say a washed out silver cross index, then you would have some hope that silver cross would turn out quickly. But in this case, no, that's not happening. So this is excellent guidance, and we've got them both topping here. It's on the top of the range right now, near the top of the range, making the top. It's not automatically that price is going to top out, but I think it is at this point. I think it is, so that's what we should watch for there. So anyway, I admitted to my screw up, and on the Saturday special edition. And I also talked about the fact that maybe we are in a bull market, although Erin did step all over those lines for me. But yeah, I think we are in a bull market. Just to put it in context, after the crash in 29, it was a rally of 48%, almost 50% here, and that lasted about 5 months, I think it was. And for that period of time, I think people thought everything was great, and we were coming back to make new highs. But of course, that never happened. Let's see. I think that I finished what I wanted to say on there. Yeah, I did note that the SPL total volume was really very far down today.
Yeah, I think that's a positive given we had a negative day.
You know, just to break away from the charts for a minute, but to try to get some context and concept of how really bad off things are. I know we have a lot of cheerleaders all over the place telling us how great it's going to be, and it's going to not, and it's not going to be long, and it's all going to be over, and we're going to forget about it. But interview I was listening to, some guy was from, he was a cop from Las Vegas, and they have laid up a bunch of them off, and they're not bringing them back. And he was talking about how, you know, the casinos are completely shut down. So they could open them tomorrow, but who's going to come? You know, people aren't getting on airplanes yet. They've got tens of thousands of people, maids and croupiers and dealers and that kind of people that are supporting that, and that, you know, are supported by those casinos. And you know, it's hard to see any way that those casinos are coming back anytime soon. It seems to me it's really worse than it was when the real estate market was crashing back in 10 years ago.
Yeah, I totally agree. And that's, you know, that's going to be the interesting thing too, is how are they going to, you know, we keep talking about plans being unveiled. I know Governor Newsom here in California is supposed to unveil a recovery plan tomorrow, and how, you know, we do start opening things up. But yeah, I mean, people are scared. You know, that I know I'm not going to be racing out until I know that there's at least, you know, widespread testing.
Right.
But
Yeah.
go right ahead.
Yeah. Okay, and I got the first numbers on Q1 earnings. Only 5% of the earnings are in so far, so not really much to make any ado about. But just note, I did notice that this range projection is starting to drop, and I was putting this range, the green line, possibly dropping to here. But I think we might have a condition where it just drops out of the bottom drops out of it, just because this is an excellent time for people to get stuff off their books that they didn't want to have to reveal, you know, in days past. Mm-hmm. So that's what happened here. There's a lot of junk that they just got off their books, and when they came out of, they were looking a lot better, and they ate the loss or whatever the problem was, and that was it. So we might see something similar here. I'm not sure. Well, yeah, so that'll drag the range down again, and it would be not much value in terms of, you know, yes, undervalue may be down to, or overvalue might be down to here, say, but it's probably going to be hard to make any sense out of it from a technical standpoint. Although right across here we do have good technical support. We have good technical support around in here. But be that as it may, just taking a quick look at that. Mm-hmm. I think that's good. You want to take it back here?
Oh, okay. We've got about 10 minutes left. Let's see what we got.
I can do some other.
Yeah, go ahead. Let's look at
Okay.
your charts.
Okay. I got the WTIC broke down again today. Well, I shouldn't say it broke down, not on this chart anyway, but it's moved down again. Uh, Seems that oil starts out good in the early part of the day, and then it was down I forget how many percent. No, 9% today. That's what it's down. So oil is, I think they may have worked the stuff out with Russia, and the Saudis and OPEC in general, but I don't think oil is going to be bouncing back anytime soon. I know what I wanted to do. I wanted to look at, I have a folder here where I call Fang Plus, and it's here we have Apple. Apple has not done that great. I mean, it's come back what 28%, but in terms of its total decline of 35%, it's just not looking that great. We've got the rising wedge formation there, not looking good long term or even intermediate or short. Amazon, is this right? I
Oh
guess
my
it
gosh. Yeah, I
is.
think so.
Yeah. Well, if we just take a quick look at the weekly, that's got them near all-time highs. There was some news on it, but now I forgot what it was. So it'd be worth looking up after the show, see what it was. Facebook, here's another Apple rising wedge situation. And you can see it hasn't responded really well off of that bottom. Google, another rising wedge.
Yeah, that one's really oversold.
Google can change their name, but nobody cares. It's still Google.
It's still Google. Does anybody say Alphabet? I don't think so.
Right. Microsoft, not a bad recovery, really. We still have kind of the mechanism in here for a rising wedge.
Woohoo, I got that one. I was pretty happy today.
Yeah, well, it's doing well. I guess with everybody at home, Netflix is getting lots of subscribers, and
Yeah,
then of
and I do
course
believe that
Tesla.
was a diamond not too far back.
Tesla had a nice day today too.
Ooh.
Although I don't know who's buying that.
Mm,
Twitter.
not good. It's hit that overhead resistance at that 2019 low. Mm-mm.
Right. Okay, and I wanted to take a look at. I had DuPont up several weeks ago, and I was talking about the dividend versus the EPS, and I couldn't think of it. It's the payout ratio that we talk about. And here, you divide the earnings into the dividend, and it should be less than zero. In this case, you've got what? At least 2 times the dividend. The dividend is 2 times the amount of earnings, which that can't last for long. So
Mm-mm.
this 3.2%. That's one of the fundamental things I look about any stock that I consider um, as a as an option to buy.
Mm-hmm.
Let's see if these are updated yet. Okay,
Excellent.
they are, and
Ooh.
so yeah, topping. Um, Here you had a bunch of topping while the market was going up. I don't think we're in a situation, we're in a situation more like, say right here, I think, and here, and here, and here. So let's just, I would consider that we're going to see, I think we've already started to pull back.
Mm-hmm. Yeah, they're overbought for sure.
Right. There was something else I wanted to say, but I don't remember what it was now. But it was,
Well,
yeah, go ahead.
well, if you think of it, you've got it.
Right. Okay.
I've got one. I want to go over a diamond report and talk about my trading room, but that's about it.
Go ahead.
All righty. So you were mentioning Amazon, and Tuesday of last week, when we did our show, you had brought up that XRT, bring it down here. I had that as the last one. The XRT had started to look pretty good. We had the double bottom. We had just hit a move over that confirmation line. PMO was lined up. And if we do an updated version of this chart, there we go. It did activate. It's pulling back. We did, it looks like just, let me see if I inspect this, if we covered that gap or not. It looks like, yep, I think we did. Just barely covered that gap, and now it's heading back down toward that support level. But, you know, I thought that they were looking pretty good. And here is Amazon. I had that one in here as well. That was my first one. And, you know, we were looking pretty good here. I was thinking possible even reverse head and shoulders. I don't think I talked about that, but the fact that we were getting that nice move off of the V bottom, and then we needed to cover this gap still, and everything else was confirming. So if we look at the chart now, of course, we got that big move. The V bottom executed around here. We broke out, and now it's made that move all the way up to the top. So I think that's looking pretty good, but we are looking at some resistance. But just a little bit of, I'll toot my horn just a little bit for, for the diamonds reports. And you can find these on our website, of course. I do recommend that you sign up for our free newsletter, free emails, which I will send various blogs and videos. And right now, we're talking a lot about our trading room. But here's our blogs and links page. You can get to this even if you're a free member. And there are some free free articles out there for you to look at, and of course, free links as well. I really wanted to mention that these workshop links, really, really great, very rich amount of workshops that I've done to help people, and building blocks of technical analysis is a great place to start. But I wanted to talk briefly on Tuesdays and Thursday mornings. I've paired up with Mary Ellen McGonigal of MEM Investment Research, and we've started a live trading room that we do from 11 a.m. Eastern to 12:15 Pacific. We don't do it at the open because a lot of we're on the Pacific coast and that's an early morning, but we want to make sure everybody can join us. So really recommend you check it out. The way you will get the links for these trading rooms is to go and sign up for that free email list. I have that, whoops, right over here. If I can get there you go. So again, just our homepage, sign up for the free emails, and I send those links out the day before, and hopefully you'll come and join us in our trading room. That's pretty much it for the show. Any parting remarks? We got 30 seconds.
Sure. Wanted to say, and I had forgotten, that people might wonder, are we under bullish rules or bearish rules at this point? And I would say neither. I just have to say maybe short term we're bullish, but longer term bearish. I'd say right now it's a wash. It's hard to figure out.
All right. Well, happy trading, everybody, and join us again next Monday, 7 p.m. Eastern. Happy trading.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.